think there's a lot of people that are anti-crypto that think this whole issue is going away.
Yeah, it's not.
Digital assets are here to stay. They are not going anywhere. And if you walk into any business school in America with a bunch of 20, 21, 22-year-old business students, this is where they gravitate to. Like, I'm 49. I've grown up my entire life thinking about fiat currency. So have all of us.
I have not grown up always thinking about fiat currency.
Well, okay, it reminds me of like a kid. It's like if I went to go snow skiing the first time, I would be scared to death of everything. If a kindergartner goes snow skiing the first time, they're fearless. People that are interested in finance are very vested in digital assets because everything is on their phone. They do everything on their phone. Some of them don't want to be banked. They want to custody their own assets. So yes, there's the stablecoin part, there's the Bitcoin part, and then there's a huge issue called custody. How do you want to protect your assets? I want them custodied in U.S. banks because we have the best banking system in the world. We have the most diverse banking system in the world. There are a lot of people in this country that want to disconnect from the banks.
Yeah.
And what does custody look like for them? At the end of the day, these are the kinds of questions we have to answer. It affects payments. It affects the ability for us to maintain our currency, the world's reserve currency. It is foreign relations. And more than anything, we can't let China, Russia, Brazil, India be the country of choice.
That, ladies and gentlemen, was a very short clip of something that Rep Mike Flood tweeted yesterday. And of course, the tweet reads, "Crypto is here to stay. I'm excited to work with President Donald Trump's crypto czar and new leadership he'll place at the SEC to help make America the fintech hub of the world." And of course, we just played a clip from his conversation. And I wanted to start there because despite the morale in the cryptocurrency space over the past couple of days due to the price action that is largely coming on the back end of a lot of macro uncertainty, there is a fundamental storm brewing for this technology and the cryptocurrencies involved. And I think there are life-changing opportunities at hand with being early adopters and investors in this space. So do not fear, guys. ALLIncrypto is here. Welcome back, everyone, for another daily market update. There is a lot going on. There's a rather ominous feel to the markets, certainly going into today. We have non-farm payroll. Now, employment is a good barometer for how well an economy is doing. Do you have strong employment stats? Are you adding jobs to your economy, or are they getting taken away? And of course, this has ramifications for monetary policy, which is, of course, set by the Federal Reserve, which are obviously the great manipulators of liquidity, which, of course, markets love. And of course, on top of that, you also have unemployment rate. There is a direct correlation between unemployment rate going up and traditionally the S&P or the stock market generally going down. So today, really what we're watching for is an unemployment stat that we want to be the same. We don't want to see it rising or, if anything, lower. That means the economy is doing better than certainly it was previously, certainly through the lens of unemployment stats. Now, whether you believe these stats or not is an entirely separate debate. Statistics and more damn statistics. That's the saying out there. But of course, we also have non-farm payroll. And the expectations for non-farm payroll are that it's going to come in slightly lower than last month, which was kind of a blowout. And there's kind of a double-edged sword to this, because if we get bad data, that's perhaps going to push the Fed to be more generous with rate cuts and quicker with the ending of QT, which is the rolling off of their balance sheet. However, that also does have negative ramifications in regards to the economy more broadly. The flip side, of course, would be if you get good data, okay, it's good, it shows the economy's in good standings, but it ultimately means that they're going to potentially be a lot less likely to implement more dovish monetary policy. So there's this real dynamic going on in the kind of macro markets as it relates to the bond market. The bond market's continuing to sell off and yields are continuing to climb, which means there's a lot more money that needs to service that colossal market that is the debt markets. And there's no sign as of yet that the Fed are going to step back in. There's a lot of worries around that. That's the main kind of worry when it comes to the markets at the moment. When people talk about this kind of everything crash, what they're talking about is the devaluation of the debt markets, which ultimately underpin the entire financial sector. So that's why this data is very important. We did say it was going to be a volatile week. We looked at what was to come this week, and there's been a lot of data that's came out. Some good, some bad. Ultimately, it's sort of made the markets a little bit uncertain. And to kind of compound the ominous feeling that we're talking about, everybody is now pointing towards this inverse head and shoulders. We're so used to looking at inverse head and shoulders because, of course, we're in a market that's going up, and markets will often nestle in a kind of inverse head and shoulder fashion. You'll have a smaller one that will compound into a bigger one, and then a bigger one that will ultimately give you broader targets. But this is being thrown around all over the place. This is something that we looked at previously when we were looking at this being the right shoulder. And we said, what do you do with this information? Is it plausible that Bitcoin might want to complete this pattern and take a trip down to the sort of 78K region? It's entirely plausible. The problem that you've got is this is a bull market. And do you want to be short a bull market? Do you want to be out of crypto in a market that's very clearly in a broader uptrend? And we've shown you that day in, day out. And I also warned people about smaller patterns that are counter to the trend that we're in, which is clearly an uptrend, which we'll talk about in just a second. We had shown previous examples. You could see this could have formed into a head and shoulders. This, of course, could have been a head and shoulders, and you ripped out of it. Again, we've got many to show. You can see this is a bit of a smaller one, very similar DNA. Ultimately, this was a consolidation period, looked very head and shouldery, but you ultimately bounced off of it. And this, of course, was your big one back when Bitcoin... In fact, no, this wasn't even your big one. This was another one, head and shoulders. You can see the same DNA in these patterns that we ultimately have in the head and shoulders today. And Bitcoin, of course, soared higher out of the back end of that. And that's the problem with being short or trying to be too smart in what is clearly a bull market. If it doesn't go in your favor, the short-term pattern, and you're committed to it and you get out of crypto, this market is very volatile and can move very aggressively against you or in line with the trend, which is very clearly a broader uptrend, which I'll highlight very quickly right now. And that can mean that if you get out the markets, this is phase 2, based on fears around a short-term pattern, and then the opposite takes place in line with the trend, you might be buying some of your altcoins from the point in which you sold 30, 40, 50% higher than where they were. And that means you have 30, 40, 50% less crypto for the capital that you have trying to be too smart. And that's why we always encourage people to essentially stay away from short-term trading. I don't think people should be traders of the cryptocurrency space, period. In fact, I've seen a lot of people that I've got a lot of respect for not do very well when it comes to trading the cryptocurrency space. And that's ultimately because of the kind of volatility that it has. The kind of price action that it sees is oftentimes very hard to risk manage or perhaps trade. It's often challenging in the sense that it will, before going in the direction of a pattern, fake you out or something along those lines. And really what you want to be as a trend follower, as an investor, you want to be ultimately on the right side of the trend, which is an uptrend. And that short-term inverse head and shoulders pattern that everybody's showing is counter trend. Does it mean that that can't play out? You also have that CME gap. I'll show you that very quickly, guys, as we've mentioned it. You also have a CME gap at around about, is it 68K perhaps? Yeah, so in the sort of 78K region. And that, of course, would sort of coincide with this inverse head and shoulder pattern. So there are some ominous signs. The problem is, what do you do with that information? Do you get out of the space and try and buy back some cryptos cheaper? Well, there's an issue with being too smart. And I've done this many times, certainly in 2017. And actually witnessed many people do it in 2020, 2021, only to miss out on some pretty serious upside. So despite this pattern being present, despite there being a CME gap, despite there being a kind of ominous macro feel, the broader trend for the cryptocurrency space is to the upside, ladies and gentlemen. And we've looked at that through the lens of course, Bitcoin, which is very, very clearly in an uptrend. We've looked at that through the lens of the total cryptocurrency market caps, which is consolidating in and around that bull flag target that was made. We knew you were going to break out of this to the upside, or we thought there was a high degree it was highly probable. You've got the total cryptocurrency market cap, which of course has rejected off of its all-time highs, likely going to set up some sort of a cup and handle and see continuation. This is everything excluding Bitcoin. And then, of course, you've got the total cryptocurrency market cap excluding Bitcoin and Ethereum, which is at all-time highs, having a bit of a rest, bit of consolidation. You'd expect a bit of a pullback here. This is often how markets will then take out a high. They'll put a toe above it. They'll pull back into it, just like Bitcoin, and then they'll see continuation out of it. Or, of course, we have others, which, again, is at all-time highs. So we've got the market caps for the cryptocurrency space at all-time highs, which is a very likely or commonplace to see some sort of pullback and consolidation. But ultimately, we're very steadfast on the fact that this market has higher prices, higher targets ahead of it. Certainly that signaled to us technically and also fundamentally, going back to what Mike Flood had to say there. There's this real adoption coming for this space, or acceptance of it, recognition of it, regulation of it, that is ultimately in the year ahead of us. And of course, we've looked at the likes of crypto ETPs, which we still have higher targets for, whether that's what we just looked at there, which is Grayscale Digital Large Cap Fund. Remember, we're predicting the same thing for Bitcoin's Grayscale Trust. Even in regards to the same pattern, of course, there's fundamental news that came on the back of this. We are going to see a slew of ETFs coming, I think, in 2025. And then you've got the likes of Bitwise Top 10 Crypto Index Fund, 21 shares, Crypto Basket ETP. You know, these all are destined for higher prices. And I do believe Bitcoin dominance is coming down. But what I'd like to see is a lower low put in here. We've got a lower high. I'd like to see a lower low. This wasn't really a lower low from the trend that you've previously been in, but it could be the end of something. So we're really not worried technically about the broader direction that this space is ultimately heading in. Could this inverse head and shoulders pattern, however, though, play out? And it could. And it's important that we say, okay, there's a possibility of this happening. The problem is, from an investor, what do you do with that information? If you're a trader, you can try and trade that as long as you know where your risk management is. But if you get that wrong, let's say you say, okay, I'm worried, I'm going to get out based on this this head and shoulders pattern. I'm going to sell my crypto. If you're wrong, you're going to lose some of your hoard, if that makes sense. So it's not really something that we are doing. We're long and strong in this market. If Bitcoin does want to pull back and complete this inverse head and shoulders and fill that CME gap, it's really not the end of the world for us. I'm still looking to accumulate cryptos. We've actually just brought up a whole load of new cryptos that have very similar structure to XRP that we think are going to do exceptionally well, that everybody's forgotten about and nobody's talking about. But I think these cryptos have embedded themselves in countries like China, and ultimately going to be used and utilized in this kind of crypto arms race that is upon us. So very interesting day from an economic data point of view, because it has broader ramifications for really the bond market, probably more importantly than anything. And of course, the yield markets on the back end of that, and then obviously the dollar and the currency markets. That's going to lean on the markets more broadly. But when we look at the broader trend for the cryptocurrency space, despite there being a head and shoulders on the shorter time frame, we think it's in very good standings, and ultimately we've got lots of technical reasons and of course fundamental reasons to expect this market to climb higher. So do not fear, guys. All in Crypto is here. That's it from me. This was just a short and sweet update. I'm going to love and leave you on that note. See you all in the next one.